30-40 minutes webinar. Today, we are going to discuss more on our teams, how as a finance we build our teams, how we empower our teams to get into the taxation field as an experts, and how we design their KRAs so that they'll be fully equipped to work with the finance and taxation part. Next point. So start with the tax landscape has changed. We all know earlier we used to have a sales tax, VAT, service tax, and then now we moved to GST. So over the period, even Government of India is also changed a lot, and they also consolidating various tax structures. The indirect taxation is all clubbed into the GST, and now the direct taxation is also they're going to club into DTC from 2026 onwards. So a lot of changes are coming in many of these, I can say, regulation point of view. To consider that, one of these, this slide explains that what are the periodical changes we have as a digital surveillance. The first part is e-invoicing and API-based reporting. E-invoicing is nothing new to us. Earlier, we used to have a way bill, or we call as a transit invoice when goods are going, some documentation with delivery challan or something we used to give it. Those are manual pre-printed stationaries which we used to write manually and then accompany with a transporter so that if anybody checks in between, it shows that goods are authenticated. But now what happened with the government going with the more on automation, digitalization, when the GST is implemented, e-invoicing has fundamentally changed the tax reporting works totally. Under GST, invoices are now validated electronically through GST portal, or we can say GST network. And before they legally valid, it means the moment you raise the invoice, that is getting validated by the GST portal, and then it is final invoice is getting raised. And then when a company generates an invoice in its ERP, the data is sent to invoice registration portal. So when the API helps us to do this automation, the moment you raise an invoice in ERP, whether it's a SAP or Oracle or Dynamic 365, the invoice is generated. And then when company generates an invoice, the ERP have invoice registration portal through invoice reference number. That is called IRN, or a QR code it generates, and with the help of API. So this API, what happens when the ERP is connected through GST system, allowing invoices to report automatically, instantly, and on the real-time basis. So the focus for finance teams shifts from preparing and ensuring a clean data or even accurate data in ERP system. It is moved towards the controlling. And the tax system now sees transaction almost instantly. Whatever we do, our invoices, our invoices, our movement of goods, government can online, they can track it. We cannot go escape from that. So this is another advantage where we can have online tracking of our goods and materials and invoices. And with the next part is the auto population and system validation. This is nothing but, I can say it's a major shift from the digital tax ecosystem, because auto population and system validation, generally it is once invoices are reported through e-invoicing system, the data automatically flows into the GST portal or GST returns or to their network. Then what happens, for example, a sales data can automatically populate from GSTR 1 and purchase data flows from GSTR 2 for the input tax credits. We know that GSTR 2B is for input credit. Then the system also performs validations, checking invoice numbers, GSTIN, tax rates, and duplication of errors, everything it verifies. And then finance teams are no longer now preparing a return manually. They must focus on accurate of data or transaction at the source itself, at the beginning itself, so that the validation and other things will be more easy. Then the third part is AI-based scrutiny. What is AI-based scrutiny? Now the department is using artificial intelligence. With the support of artificial intelligence, the tax departments, what they're doing is They analyze larger volume of transactions through GSTN network, and these are automatically identified like unusual patterns or mismatches in input rates, or even abnormal tax rate usage, or any inconsistency on invoices. They immediately alert. This means scrutiny is no longer a purely, I can say, a manual or random. It is completely data driven and risk based. So for finance teams, what happens? It highlights the importance of accurate data and strong reconciliations and proactive compliances. Next, please. Yeah, this is we all know traditional versus digital first finance. Our old models are, we can say, written filing, manual reconciliations, reactive. Whenever somebody gives a notice, then only we'll reply to them, or only we'll do at the time of audit, we'll do all the reconciliations and then find out the discrepancies and pass the entries. But in new model, it became a continuous reporting and system matching. It's all driven by the technology and predictive risk model. It will give you how many invoices you have cancelled and the credit note raised. It will give you how much mismatch are there in your, I can say, to be reconciliations. And also it will give you a real-time monitoring. So with that real-time monitoring, what happened? The risk controls will have a more attractive, and predictive controls also will be more. The predictive controls will give you a compliance purposes. It will take care of your compliances on a continuous basis so that you will not mismatch anything. And the predictive control with a large volume of tax data is now available digitally because we are all are going on technology front. A lot of analytic tools can identify patterns and potential compliances and also risks before any notices comes. And then the real-time monitoring, as I said earlier, tax reviews happens once in a month, once in a quarter, or once in a year. But now it has to do on monthly basis, on in fact on daily basis. Otherwise, you have a problem of input tax credit not getting affecting on cash flows. Next, please. Yeah, why finance teams are under pressure? This is a good slide. I can say I'll focus here on a couple of minutes because increase analytical driven notice from tax authorities. See what happened earlier, tax departments, when they have manual accounting and manual system, they are not able to focus on which is right or which is wrong. They used to go on a systematic way where, okay, 30th September, they have to give some notices. They issue some 10, 15 notices to the respective companies. And the companies will come and sit with them for reconciliation. And then they do either, if they agree, they'll give a report. Otherwise, they'll give show cause notice. So that is now gone and is now becoming a completely, I can say, automatically it is analytical driven. As I said, now AI is, the department is using AI. With that AI, they are doing a lot of tools utilizing where they give analysis, which customer is having higher volume of business, which customer is under 18% bracket or 24% bracket. Is that consistency is there continuously? Are they changing month on month, to 5%, 10%, 12%, like that? All that analysis the department is doing, and then a sharp rise in this analytical drive, notices from tax authorities are issuing very fast. Where you, if you have any discrepancy in observing any month, next month you'll get a notice, unlike earlier quarterly, yearly basis. And then it is a lot of goods and services department now, that is GST department and tax department. What they're doing is the transaction level data and automatically detecting defects and mismatches and reported in sales or tax credits or unusual patterns. And this will lead to cash flow blockages due to delayed credits. What happens if any mismatches comes, that mismatches by the time you identify and reconcile, it will have impact on your cash flow. You have to borrow more to meet your working capital. So unnecessarily your borrowing and interest cost is going increasing because of our internal failures. So that we can plug it when it comes when invoices are not properly matched or vendor fails to report transactions. It will have impact on working capital. We need to identify these things quickly and then report to the management. Third one is ITC mismatch and vendor non-compliances. As I said just now, the vendor mismatches of what happens if vendor doesn't file his invoices properly, we will not be able to take the input credit. In that case, it is a major operational challenge. In that case, what happens? The company has paid the tax, but credit is denied if the supplier fails to report the transaction. In that sense, finally, the what happens? It will have a impact on your cash movements or cash flows. Then growing litigation exposure and CFO is accountability. See here, growing litigation. Why we will have growing litigation? Because of our inefficiency or not a system-driven problems. So in this, compliances is now become a system-driven and transparent, and finance leaders are expected to ensure strong internal controls, accurate data, and proactive risk monitoring. All this needs to be controlled so that the finance team is shifting their focus from simple compliance to a strategic risk management and digital governance model. Next, please. Next slide. Yeah. Yeah. Who is the next gen finance professionals? See, if you see, unlike earlier, a commerce graduate or a postgraduate or an MBA, MCOM, or even CA people can come into finance and then they'll start working without even technology. There are days where up to I can say 1979 or even 1980, 88, 89, up to 90, I can say. It's a purely manual accounting system. We don't have even desktops also, except a calculator. That gives a wrong practice of delay reporting, not reconciling on time, because it's a manually. But now what happened, even in CA courses or even technology post-graduation courses, technology is form part of our curriculum. So many companies even looking for fintech. We might have heard the name fintech companies. So finance and technology is nothing but is coming to fintech. Similarly, now the taxation is coming under technology. So the taxation and technology, people has to undergo training on various API tools and also go into the ERP trainings, understand how the technology works, how they can improve their efficiency in taxation. And next part is accounting analytics. Earlier, it was only first part, accounting. There's no analytics because it's manual systems. There's no proper ERPs. There's no proper dashboards representing. So in that sense, what happened? They are not able to predict what is going to happen, how is going, your revenues are moving, how your profitability is going. Nobody is able to predict that. They give only historical trend. After completing a month, the MIS will be presented or P&L account presented, and then they will review on that. By the time 15 days will be over, and next 15 days they can't do corrections. So but now what happened with the analytics tools coming in picture? The accounting analytics teams are become more proactive. They will give you a 3 months, 6 months, 1 year budgets, saying that if this product X is there, this X product X have a seasonal demand. So we can produce only in 3 months in a year. Or Y product is there, it's a consumer product which can go for 12 months. So we can produce more volumes on this to get a continuity of our revenues and cash flows. Like that, a lot of analytic tools are coming in this. And next, compliance and strategy. Earlier, compliance is like a company secretary's job. Company secretary is also another profession like is chartered accountancy, like that. So it is their responsibility to report to the board and the stakeholders that company is completely complied in all respects of companies act, taxation, and other things. But now that role is shifted to the completely to CFO. CFO is responsible for the compliances and the strategy. The strategy is nothing but how you make your department more proactive function, and then how you going to support your business to grow. It is not only the accounting part, now they are part of strategy to grow the business. Next, controls and automation mindset. We should not fear about our job or our chair or something, because the more automation you do, the more advanced learnings you get it in your field, because that will help you to grow, that will help you to reduce your manual working hours, and then it will give you ease of analyzing your uh, data or your company's profitabilities or turnovers. Next, please. Yeah, the core competence is required. See here, what we need is GST and direct tax expertise, especially since we are focusing on GST. What is our expertise required here is We need to have a subject matrix on GST and direct tax. You need to learn, and then you need to go for various workshops, attend workshops, understand what they teach, and then go and see what is applicable for your company. You need to focus more on that. And ERP configuration knowledge. When the ERP people comes, technology teams, when they start configuring, you should sit with them. You should understand how the tax is being computed, how tax is being configured, and how the invoice is generating similarly. And then e-invoice mapping. As we discussed in the beginning, the e-invoice, when we do automation, we should ensure that e-invoice is properly connecting to the GST network, and data reconciliation logics, and dashboard interpretation skills. So these are the core competencies required for a finance team to make them more enabled from the tax point of view. Next.
Okay, guys, I will be launching a poll on your screens. Let's see who is actively participating in the webinar. So poll is on your screens, guys. What is a major cause of GST-related compliance issues? Vendor discounts, manual accounting, ITC mismatches and vendor compliance, cash payments. Also, audience, I'm requesting you to put your questions in the chat box or the Q&A box. If even in between the webinar, if you are having any questions, you can directly type in the chat box so that we will take up all your questions at the end of the webinar. We have a dedicated time slot for Q&A session. We will discuss all the questions, and if you want to directly ask with sir, and by explaining your questions, you can do that as well. I will enable your mics. So put all your questions in the chat box. I can see good number of participation in the poll, and also almost 76% people answered it correct. So yeah, yes, guys, the exact answer is IT mismatches and vendor compliance. I will just end the poll for now. Let's proceed to next slide. Over to you, sir.
Yeah. So what are the emerging roles in finance now? Because earlier we used to have an accountant, assistant accountant, other things, and then taxation. There won't be any department earlier as taxation. It is form part of accounts, and the accounts is responsible for entire part. Now many corporates, many large corporates and medium large corporates, they're forming a new department as a taxation department. Exclusively, they handle the indirect taxation and direct taxations. So for those roles, we have a lot of opportunities there if you have a proper skill set, where the tax data analyst, analyzing tax data and patterns, anomalies, and then reporting to the management. ERP tax litigation specialist bridges the ERP system with tax compliances, because our GST is evolving. Every second day we are having some changes. In fact, the government is also meeting on every month on GST compliances and GST reviews, and a lot of recommendations are going from corporates, and then government is reviewing their recommendations. Whatever is feasible, whatever advantages to corporates or advantages to government, they are making those recommendations. So there, in those cases, whenever notice comes, wherever notification comes from government gazette, we need to update our ERP also, so that we will not have any non-compliances in that front. And next, compliance automation lead, automates repetitive compliance workflows. There's so many works in finance where are repetitive nature, which can be automated, so that you'll have a lot of time on data analyzing. And another one is vendor compliance monitoring lead. These are tracks and manages vendor. A lot of this is helpful for a lot of manufacturing companies, because they will have plenty of vendors, and all that vendors will not able to produce their invoices properly or upload their invoices properly. Then the company will have input credit problem. So in that circumstances, they'll have this compliance monitoring of vendor person. And similarly, litigation risk coordinator. This is more of a taxation advanced level roles, where any notices comes or any show cause notice comes, They represent on behalf of the company legally drafted replies, and then ensuring company is protected. So the litigation risk coordinator is coordinator between the government department, that is the GST, and the counselors or advocates, providing right information, drafting right replies, and then going to the department, submitting them. So he is a litigation risk coordinator. So a lot of these new roles are now evolving in the corporates. So I suggest all the participants to focus on these areas, learn something new in this, and get new opportunities than the historical traditional accounting system. Next, please. Yeah. So now we have understood what are the new roles are coming, but what are the skill gaps we have? Because many people are now with experience working in companies, 15 years, 20 years experience, but they are not having capability to get into the adjustment of the new systems or ERPs. So they do their own Excels. So one is heavy dependency in Excel, this Excel. If you don't go for automation, what happened? You'll have depend on your Excels running into thousands of rows and columns and number of spreadsheets. When somebody asks information, by the time you open it, takes 4 or 5 minutes, and then you have to check the information, consolidate the information, give it to them, and there is a very danger of getting file corrupted because the size of the file is too large in Excel. It will be highly possible that data may corrupt, and then if somebody deletes that file intentionally, or then it will have problem. And similarly, limited exposure in ERP, as I said, if people are having limited exposure, then that is where the management can give exposure to them by giving training in ERP on configuration and other things. And then reactive culture, no proactive compliance or monitoring protocols. If somebody knows that there's a mistake, if that mistake is not being highlighted, and if feels that if they that mistake is being informed or if that error is being informed, they think that there's a failure on his part by looking into that things, or by frying it there, put that under the carpet. But one thing in finance and accounts, not even a single error can be hidden. One day or other it will hit. It may not come in this month or this quarter or this year, but next year somewhere it will get opened up. Then the penalty or something is very huge. So it is always better to be proactive than reactive. If somebody comes, auditors comes, instead of identifying that, and which you know it already, then they will have a big problem in front of third party. Better you go and tell the management that there's a mistake from my side, this is what is error, and because of this is going to happen. So, but I don't know how to correct it. Please let me know. Then the expert will tell you how to correct it. Then analytics capability is another gap. So where people are not having used to have a large data handling, large data analysis, and other things. So they used to report only standard balance sheet P&L in a normal Excel. Next, please. Next, yeah. Training framework. See, as I said, the training is very much important for any employee in any cadre. I can say right from joining executive or senior executive level to the even vice president or CFO level. Update of knowledge is very important. So in this, with reference to GST framework, the training phase one, I categorized into three categories. One is 0 to 3 months. Means in the first phase, you should know what is architecture of GST, how ERP takes coding, and how reconciliations works on automatic basis, and how internal controls are strengthening. You must focus on this first 3 months. Then 3 to 9 months, you should go and practice those things in how 2A, 2B analytics working, how vendor risk scoring, ITC optimization modeling, and audit simulation workshops. So in 3 to 9 months, you can go and attend these type of workshops, especially audit simulation workshops are very important because your entire data is to be audited by its internal auditors, statutory auditors, and then they report on your compliances. Similarly, government GST department is also audits your data, and they also come up with notices and short notices, shortcomings, and other things. So you should know how to stimulate your audit workshops. During the workshop, you should learn all these things. And then next is a long-term training where After completing of 9 months to next 1.5 year time, your working capital optimization, which is very, very important for any organization. How do you control your working capital by minimizing your borrowings, reducing interest cost, and you're forecasting your monthly, quarterly tax for amounts so that you can plan it your cash flows properly. And litigation risk mapping, you have to identify what are the areas you have problem, where you may get notices, or where you may need advocate support. And then business integration planning. Suppose a company is having 3 4 verticals, every business is not equal. We can say every business is unique. So when every business is unique, you need to understand how the business works, how the business process flow takes care, and what type of vendors comes, and what type of invoicing we have to do, how much time we get for realizing your debtors or receivables, so that you can plan your working capital and ensure follow up with your vendors to file their invoices on time to get input credit. So this business integration will help. If you do the planning workshops and other things, you will learn on that front. Next, please.
Okay, audience, I'll be pasting a link in the chat box, which will redirect to the poll for you. So check in chat box and click on the link. That is, a poll is happening in our LinkedIn, so that you will be directed directly to the poll. I'll be reading out for you. What technology enables automated reporting to tax authorities? Manual Excel uploads, email reporting, e-invoice and e-reporting, paper invoices. So just click on the link and it will redirect you to the poll, guys. Also, requesting you all to follow the Flotex page, Flotex LinkedIn page, which we will be posting all the future updates related to webinars and all the GST related materials. Any trends or anything related to any news or any trends related information will be uploaded in the same page. So follow the Flotex LinkedIn page so that you will be updated related to the GST and all the finance related ecosystem. Once you complete the poll answering, you can go on to Flotex page so that you can follow the LinkedIn page. You can already see good number of correct answers in LinkedIn page. Go on, guys. So once you are done with LinkedIn poll, you can you can click on the Flotex page and you can follow, which will be posting any updates related to our upcoming webinars, any resources related to GST and finance, trends, news, everything will be posted in the same page. So make sure to follow Flotex page, the LinkedIn page. We'll close the poll in another 1 minute. Meanwhile, you can go on to Flotex page, the LinkedIn page, and you can follow. And people who have not answered the question, they can just click the link in the chat box and you will be directed to the poll directly. I can already see 82% of correct answers in the poll. So once you are done with your answering poll, you can click on follow button for the LinkedIn page. Over to you, sir.
Thank you. So here we are now going to discuss on the how you redefine your KRS in the current digital era. Old earlier timely filing and audit completion. In any of the finance KRS, we used to have only, even I used to have in the beginning of my career is timely filing. If your TDS return to be filed on 7th, if you filed it, that's enough. Whether data is accurate, or data is correct, or your all the section wise you filed it, or nobody is worried. And the audit completion. Audit completion, suppose a management gives you a deadline by you have to complete audit by 31st May. If you complete, it's enough. But how many errors you got, how many qualifications you have in the report is not to be monitored. So from that stage, now it is coming is this in the new era, in the digital, I can say in digital generation, data accuracy ratios they are monitoring, automation coverages they are monitoring, how many automations you are done in a quarter, in a half year, like that. ITC optimization percentage, whether you are 99%, 98%, like that, and notice reduction index. You should have a zero notices received in the year of say up to September, and then from September to December, like that. So quarterly basis, they'll monitor you on this notice reduction. So these are the new KRS which is coming up to monitor the employees' performance on their day-to-day works, which is more on, I can say, technology driven. You need to depend more on technology with a subject matrix knowledge. If you don't have subject knowledge properly, then you will not be able to support the technology. So we take the technology help with the knowledge of your functional expertise, then coordinate with that, then you can meet your KRS properly with the new era. Next, please. Yeah. So this is a dashboard matrix. This dashboard matrix, if you see invoice matching, percentage of to be match rate, it's a greater than 99. It means you should ensure that almost 100% to be mismatching, but to be matching rate. Otherwise, if any mismatches is there, it will have impact on your cash flow. Automation, percentage of automation completed. You should have 80% above. You suppose you have taken 4 line items in your finance, your tax function for the automation for the current year. At least you should complete more than 3. And if suppose 2 are completed, third is in work in progress, still you are better off. But you planned for 4, you are doing only one thing, then you'll have your problem. Similarly, risk, that is notices received, you should have negative, in fact. You should not have any risks, any notices received, unless there is some mandatory. There sometimes what happen, department, if they don't have any clue on our business and other thing, they just default give a notice to understand that. Except there's an exceptional those cases. There may be, I can say, they'll not able to reconcile your data from the portal data to your data what you supplied or what you given during the audit time, then they may issue notice. Otherwise, you should not get any notices. And working capital, as I said, the ITC utilization, you should have minimum efficiency and you should have working capital reduction minimum 5% year on year. And the compliances, e-invoice reduction rate, you should have less than 0.5%. So these are the, now what happened, these are easily measurable and highly remunerative. Earlier, it is all subjective. If the employee is known to boss or close to manager or boss, and he said, I done my audit correctly, I done my this thing, he used to get a promotion, he used to get a rewards. But now those days are gone. Every individual's KRA is now with a matrix, and they measure with those matrix. And those matrix is given by the employees only. There, it is not given by the management. Suppose you are in function, you're as a manager defining your own matrices and then giving to employees to measure it. Then there's no way people can say that I am not aware what you told. You have to be explained in the beginning of the year on these matrices and implications. If they don't do what they get it, if they do what they get it. Next, please. Yeah. Now, overall responsibility always lies with the managers, head of the departments, or CFOs. So, own tax data architecture and then approve system designs. Whatever automations, whatever designs you design for your automation purpose, you should need to approve. Invest in automation, not only time, the management should invest in money also because every no technology will come at free. You need to spend some money and then expect that return in 3 months, 6 months time, and then your review compliances and dashboards. Now reviews have become more on monthly, in fact fortnightly in many companies, and monthly at the senior management level, so that they review their performances, their all the department functions, including finance and accounts. Under the finance and accounts, again, there are multiple parts are there. One is like taxation department, the other one is FPA, we call financial planning and analysis, and then other one is your normal accountancy part, your audits and quarterly audits, internal audits, and other things. So the CFO governance model has to be defined, and we should monitor this so that the MD or board will review the CFO governance, and CFO in turn review with his teams. Next, please. Yeah. If you are not transforming from your old methods to the new digital era, new taxation eras, the loss to you and loss to the management or the risk is high litigation exposure. There will be too many notices coming, a lot of ITC leakage where you are supposed to get benefit, you are not taking benefit, leads to cash flow inefficiencies. And then the more the tax litigation notices, automatically your reputation risk will go. Many companies think that these people are having so many notices. I think the internal controls are not correct. So this company may be not doing well. So the reputation in the market will go down. And then CFO accountability risk, it is nothing but overall department responsibility always lies with the CFO. Whether any team manager or team member fails, he cannot go and say that my team is not performed, because it is the responsibility of the CFO to ensure he performs. So the CFO has to be accountable in this, otherwise his job will be in risk. Next, please. Yeah. So to conclude this session, as I said, this session is not on our GST amounts, GST returns, or GST procedures. This is a general session where every finance member should open their eyes, learn more things on technology, and grow in the organizations. So for that, you need to have a system-driven compliances, analytic-based monitoring, and digitally trained finance teams, and KPI-driven governance. KPI is nothing but your KRAs, where the percentages have been defined. Are we filing returns or managing tax intelligence? This is a very important question, in fact. Are we filing returns or managing tax intelligence? Actually, we just filing returns is in the old era. Now you need to manage your tax intelligently. Means you need to review rigorously. You need to ensure whatever the credits he is supposed to get, you have to take it. Whatever tax you need to pay on time. Whatever returns you have to file it on time, so that it will have a back-to-back actions, and it will give you a knowledge where you can say that we are nowhere in risk there or nearby, and we are out of risk, and our company is in very good in compliance stage. So this is all the ones which I thought with my experience and what the generations are now changing into the technology and new tax regimes and other things. I thought I should share with you all. Any questions from you all, please let me know.
So audience, you can start putting your questions in the chat box. Meanwhile, we have a question from Krishna Kumari.
Okay.
So how will you know the recipient whether e-invoice applicable or not for their vendors? If e-invoice mandatory as per the turnover, but the e-invoices are uploaded manually, then the ITC is not eligible for recipient. How to check in these cases?
Okay. Actually, there are two questions here. The first part talks about the e-invoice. Generally, e-invoice, what happens, vendors having a turnover up to 5 crores, above 5 crores, must issue e-invoices. And then you need to obtain a vendor declaration turnover. So that when you take that invoice declaration from them, what is the turnover before you create your vendor in your ERP, you have to take an onboarding data, so that your ERP itself, you can mark it that this is above 5 crores turnover, e-invoice is must. So there's no question that they can avoid it. Now your second question is on e-invoice mandatory as per turnover and uploading it manually. If they upload it manually, definitely they don't get any input credit. You won't get anything. So what you need to do is you need to check IRN. your invoice reference number or QR code or acknowledgement number and acknowledgement date. And I can verify the QR code verification. I can compare invoice with the GST or 2B, whether 2B is invoice in 2B, whether they made invoice in 2B or not, whether IRN present or not, if vendor is above 5 crores or not, like that. And use IRN portal or GST portal to cross verify so that you're not losing any of those things. Now, another part is that if the turnover is also above 5 crores, but no IRN on invoice, don't take ITC until it is corrected. Otherwise, you will be losing. If you file a return without taking ITC and you will not able to take it for the next time, you are losing hard cash in that. So you need to see a finance control team. You should have I can say, control template in Excel or wherever it is. Detect an e-invoice automatically from vendor invoices and with the GST or 2B data. And then verify your own data, whether it is matching to your above 5 crores invoices, whether e-invoice is there or not, or whether GST or invoice has been filed or not. If it is there in 2B and it is matching to your ITC, then you can have a input credit. Otherwise, you will not able to take input credit.
Krishna Kumari, I hope your doubt is clarified. If you want to ask, you can unmute yourself and you can ask also. Or else we can go to the next.